In today's episode, we are joined by David Fogel, co-founder of Alma Angels. Alma Angels is a community for angel investors. They focus specifically on investing in gender diverse teams, building tech or IP-rich businesses. David shares why there is a need for Alma Angels. I asked David about women and risk when it comes to fundraising and investing, and David shares his observations and experiences. I also asked David about red flags on both sides of the founder-investor relationship. Welcome, David.
Thank you.
It's nice to have you with us. We're going to be covering angel investing today. Let's start by covering your background a little bit. You've had an amazing career. Would you mind sharing your story with us?
Yeah, sure. So, hi, my name is David. I'm married to May, father to Nathan, almost 7 years old. Started my career in building tech in Israel, mostly fintech, B2B. Spent about 5 years growing a team from 4 to 60 employees. And we build software for financial industry, basically pension funds, insurance companies, banks. And after 5 years doing that, I realized I'm not the idea guy, but I'm the get stuff done. And I was like, okay, so let's move into venture because investors, VC, that's what they do. They help entrepreneurs get to the next level. And I spent about a decade after that in different roles within venture. And starting from an associate role, I did a stint of several years as an M&A advisor, running a corporate venture arm for Telefonica. There was an accelerator and micro fund based in the UK called Wyra. The investor across UK and Ireland as well. Ended up raising my own fund, about 150 million pounds, to invest in early stage startups across the UK. And the other part of it is basically operations and buildings. After 4 years with the fund, took a step back. I miss doing stuff. There's a lot of great things about being an investor, but you don't do. You advise people on what to do and give them money to do. So I joined a startup. I was an investor in it for several years called WeFarm. I came in as COO, scaled the company to about 150 employees across 10 different countries with 3.5 million users. WeFarm ended up raising, I think, over the years, about 40 million. Unfortunately, end of 2022, we were just raising a bridge and our lead investor dropped out. So we had to learn how to close down a company with 150 employees in 10 different countries, which is a whole different experience. And the last 2 years, most of my work has been supporting and working with founders and funds as an advisor, basically consultancy advisory, focus on practical experience from experienced operators that predominantly been on both sides of the table. And I'm also one of the co-founders of Alma Angels, a diverse community of angel investors that invest in women-led startups that have built in tech or IP-driven businesses. Started that in the end of 2019. That community now has invested in roughly 200 startups to date that ended up raising more than $200 million overall. And that's about it.
That's amazing. That's amazing. I'd love to talk about Alma Angels more, but before we do, I'm curious to know, what is it about the startup space that you find really appealing?
So it's really interesting because I think there's some people think VCs are all about innovation, but VCs are all about making money because you're a money manager. But at least for me, what attracts me to startup is I learned very early on that I really love the 0 to 1 or the 0 to 10 type of journey of taking an idea or a concept and actually turn it into a company and a product and seeing that transform life, both of like clients, but also employees. And you see a potential in what you can change the future on. And I'm a naturally positive and optimistic guy. And I think you need to be one to be a VC investor because you look 10 years into the future. And basically supporting people that will change the future for good is something that like galvanizes me and is really interesting. And there's a balance because you also want to build the future, but you need to optimize for what works best. So for me, I moved between those two sides over the years, but seeing that change that product can bring to different roles and different individuals is just really compelling.
Yeah, definitely. I became a product manager because I wanted to work in the startup space as well. I think Like you, I really love the 0 to 1, taking an idea and just bringing it to life. I do find that it's very dynamic and there's a lot of creative energy for me that's very appealing.
Yeah, and again, I say 0 to 1, and that means different things to different people. Because
Mm,
I still think at WeFarm with 150 employees, we're still like relatively early on,
mm,
because there's so much more that we can do, and we build and we planned in terms of actually making a difference in the world. And it's super compelling to see that and build stuff. And I think, especially in early stage, you're a jack of all trades. So you do a lot of things, and the outcome matters more than the process itself. You need to experiment and be comfortable with that. I think, and this is something that I learned over the years, there's different types of people and how they expect their career to develop. There are people who feel comfortable with only moving a role if you put it on the horizontal line, the skill set that you have, and on the vertical line, the anxiety that you have. Most people move a role once they have 90 to 100% of skills and increase anxiety a bit, but then they're good. And there are people such as myself that are like, I'm 30% in, I know more or less, let's go. And I learn on the job, but then that level of anxiety suddenly becomes really high. But pace of learning is amazing. And if you
mm.
enjoy that, and if you enjoy learning on the go and experimenting and improving all the time, and you thrive in learning, I think startup is a great place for you.
Mm, mm. Would you say that you also require being a fast learner? Maybe that's why people take the small increments, maybe if they're not as fast at learning and like learning on your feet,
Yeah,
figuring out
I
things.
think so. I think there's also an inherent aspect of how we teach people to learn and what our expectations are. And this is as a father as well. I see that in the educational system. If you think about it, most of us are trained in day to day business. When we talk about business life, is don't make mistakes. When you go to school, there's only one right answer in the test, and you have to get 100 or else. If it's 90, then where's the other 10%? And inherently, when you build something innovative, that's not the process. Creative people make mistakes all the time. They experiment, they learn. And we're geared towards not to make mistakes and not to move fast. The way we learn how to learn is not about actual learning, but it's more about how do we complete tests, which again gives you a certain mind frame and like mindset on how to build stuff. And that's why people aren't comfortable with risk, because the reality is, if you start your own business or you work for somebody, like, and we've seen it in the last couple of years, you have 3 months notice if you're really good in a really good business, but then you're out. And if you put your time and effort into building something you believe in, and you control what you do and what your future is a lot more than if you work for somebody else. But again, it's a
Mm.
lot in the perspective of what you have, because people feel security in a big company. But as you can see, when everybody cutting and giving layoffs on left, right, and center, it's not that easy.
Yeah, for sure. We're going to talk about risk a bit later. I'd like to understand what drove you to starting Alma Angels.
Okay. So I'm a co-founder of Alma. So I'm not the only person that started with Ella and Dipali, Christine, and Roxanne. And I was there from day one and is now joining me as a partner. Um, I think I can tell more about my own personal journey. We all have different paths to it. I think for me, it all started predominantly when the Me Too movement happened in 2017. I was a partner in a fund, and it was really, I think, a weird situation where, as a middle aged white guy, I looked around and I was like, what the hell is happening? Who are these people? How can they allow themselves to behave that? Those are not the values I thought we as an industry in venture and tech, we focus on. And I realized that if I want to see the change I believe should happen in the industry, I actually need to be proactive and start doing stuff. And not just talk about doing stuff or a keyboard activist, but turn into actually being active. At that time, I said, okay, so let's try and work and support women that build in tech. My experience in network is in tech and IP driven business. So if any woman that reaches out that I can help with, connecting her to investors, giving feedback, whatnot, I'll put the time. And between 2017 and 2019, I ended up working, I would say, close to 100 women, the build founders that work in tech. And I was shocked by what today I call the shit show of fundraising while being a woman. It was, It's funny because I work with hundreds of entrepreneurs over the years, or like close to 1,000 over the last 25 years. And men have never experienced it, but almost every woman I work with specifically within that time period, I think 90% of women were sexually harassed at least once. And I'm not even counting the misogynist comments of disregarding you or your opinion. Like literally proposition came back and said, and then he said something like, let's meet up in my hotel room or let's continue the discussion over a cup of over a beer on Friday night. And like guarantee you, no male founder I ever met or work with has had that experience. And still today, most women, when I talk about like, founders, are like, "Yeah, happened to me." And most men was like,
Yeah.
"Oh my God, no, really that often?" I was like, "Yo, you're probably exaggerating." And I realized like, just talk to the women, like your founders that you have within your circle. You realize it's a lot more prominent. What I realized is you can't change the behavior of a 65-year-old man that believes that that's how he should behave. But if you think a lot about early stage venture, it's basically about people connecting. Yes, the business needs to make sense and need to care about what you're building, but at core, as an angel, I invest in you. If you are building something that's interesting for me, that's even a bit better pro bono. But the great idea is I believe in you that you will solve this problem. And nature built us in a very simple way, which is if we look alike, we are more likely to connect. That's why, 65-year-old British guys invest in 25-year-old British guy because they connect. They can see themselves and so on. So a lot of the thesis was if we're able to diversify the pool of check writers, we can actually have more investments into gender diverse and women-led startups just because they connect better. And there's a lot within Alma there that started like that. And I reached out and basically at the time I was a partner in the fund, so I reached out to different funds and I was like, okay, so who are other women angel investors that you work with so I can start directing founders to them? And 2019, out of 15 different funds I emailed, almost everybody came back with the same five names. I was like, there's 60 million people in the UK. Okay, let's assume like half of it are women. That's relevant. There needs to be at least a couple of thousands that are active angel investors. Why do everybody came back with the same five names? And I ended up basically realizing that everybody's pulling to the same pool of women, but there's not really a lot of access to deal flow. Most women don't see deal flow because, and this is nothing malicious, it's just when you share as an angel, you share with your mates. And most men have other men as mates. And it's just an unconscious bias. You never proactively think about who are all the potential angels I know. A lot of what Alma started off is let's build a community of people who care about the mission, actually actively have money to invest, and basically within all that scope can get access to deal flow, share their knowledge and investment, and basically see a lot of deals so they can actually start investing in the ones they believe in. Sorry, it was a long answer.
No, it's very interesting. What is the current makeup of Alma Angels?
So we every year you have to take a pledge on you that you actually have money for this year to invest and you want to invest and share and be active in the community. We currently have close to 300 Alma Angels, roughly 75% of them women,
Mhm.
and about 30% of them, about 100 are people of color, or global majority. If you look in terms of industries, I think third work in different companies, usually tech companies, startup and enterprise the likes. A third are asset managers that work in different kind of banks, investment banking, or private equities and the likes. And the third are all over the place and different experiences. Some
Mm.
founders, some completely out of the blue angel investors that just became investors over time. But 70% of them are UK based, 25% are across Europe, and another 5% between US, I think a bit of Asia.
Is there a minimum that they need to be able to invest?
No, our main criteria is actually cadence. And let's be honest, if you put the average ticket is 30K, the median is 10. But as an angel, if you put a 5, 10, or 15 ticket, it won't be material difference for the business. If they raise, usually they raise something between 250 to 2 million. So your 5K is not going to change much in terms of actual capital, but what matters is that I believe in you. And putting that ticket in matters a lot more. Even as an angel, if you want to build a portfolio, you need to build a portfolio because, like, statistically, 90% of startups die, especially if you invest at such an early stage. So you need to build a portfolio over the next 3 to 5 years that will give you a potential that one of them will succeed and start returning some of the cash back.
Let's move on to talking a little bit about the risk topic then. We've all heard about how women are more risk averse than men. It'd be interesting to understand if you've observed this in the fundraising space, and if so, what can women do to overcome it?
So it's funny that you mention it because there's a fallacy in my experience, at least, on that statement. And I think I look at it and we look at it a bit different. And again, this is personal experience, so it's probably biased in any case. What I found is, especially when you start investing, men tend to be perfectly fine with this. Here's 5K, here's 10K. I don't know, let's figure it out. Versus women who ended up saying, okay, so how much time do I need to put to support a founder? How much money do I need to put aside? Do I need a follow on? What's my legal obligation? How much in terms of exits should I expect? Where's my time commitment overall to this? How many startups do I need to look to? Even in the 50, 60 questions were super relevant, but that gives them the framework to be able to take the investments and decide, do they want the obligation and the commitment of doing it? And men are perfectly fine to say, I don't know, I'll do one deal and see. And sometimes men don't return and women do, and some vice versa. But usually what happens is once the woman has done the analysis and she understands the framework and the commitment requirements, if she's in, she's all in. So I've seen angel investors come in from starting with 1 or 2 deals to get the parameters right, and then suddenly move into 20 deals a year. There are women, and I've seen women come in and invest a ticket of 50 or 150K, or there's everything from everyone. I don't think risk is a factor. I think understanding of what it requires, and do I want this to be for me? I think the challenge, though, is that angel investing is learning by doing. And you can learn how many hours you want online and do courses till you actually do the first ticket, and then the second and the third. You can't actually know. And you go through a journey of seeing a startup go from A to B to C and then die, or A to Z and suddenly IPO. So the challenge is that you don't need to have all the information there, right? And this is part of how we build it in Alma. Is like part of the pledge is within the next 12 months after you sign up, you need to invest in 3 founders. Size of check doesn't matter. But what usually happens, what we see is we do group due diligences, so you can ask questions, you can learn. There's a lot of recording and content, and people basically go on their own pace. But the moment there's a community that supports you in the process, you feel a lot more comfortable asking questions and fast forward your learning journey. And you start with small tickets, and then the tickets increase over time. So again, part of that is that it's more about understanding what's the commitment you're taking and is it for you, and then actually supporting and doing it. Keep in mind, this is generalization, which in true generalization fashion means it will not be right for your specific angel. Because there's angels, men and women that take high crazy risk based on the founder without even seeing the deck. And there are angels, both men and women, that do 3 hours of personal research before they invest 5K. But it really depends on the individual. And while referring more as a generalization of a theme we've been seeing.
What about on the founder side? Do you see female founders taking on less risk than male founders?
It's kind of with people when they're asked that, there's a perception, because it relates a lot to fundraising, of what is the ambition of the business and the founder and what she and he are trying to build. And I think at least from my experience, what I see is that, and I'm, again, generalizing a lot of stuff here, women tend to be good at building businesses. Men are great at telling stories. The problem is venture capital and fundraising is telling stories about building businesses. And if you look, and there's enough research out there, and I'm going to quote the same, On a business per business perspective, women return 2.5x more on each dollar than the average man. And because the system is so against them, women tend to be over-prepared when they actually take a commitment to start a business. So I actually think about it as reducing the risk of execution as an investor. But I think the challenge is in terms of how do you build a systemic, scalable VC-backed business. Most women, like in 2021, there was a research, categorically sole women team get 2% of VC money, mixed team get anything between 4 to 10%. However, research done in 21, I think, 14% of VC unicorns were co-founded by women. So no matter which stat you're using, there's above and beyond execution on the ability of either mixed team with diverse gender or at least female-led businesses to outperform men compared to the financing gap. And just imagine what happens when mixed team becomes 60% and so women-led businesses become 30%, and you see a lot more of women-led wealth that is coming to bear. And again, different topics interest different people, so they can build different and diverse businesses.
So important in terms of the global problems that we're seeing. Is there a particular problem that you're interested in being solved?
So many. I think there's a lot. I'm just looking at my own personal. There's a lot that I want to see in terms of climate, but agriculture, like everything happening in Africa in terms of empowerment, and so many great solutions for both agriculture solution, but also the community and the people on the ground. And there's a lot of great businesses that can be built by just empowering other people to build their own. And currently, one of my clients in Bramble is building bioreactors to be able to change the way of production in the world. So there's a lot of interesting problems there to solve. I think the challenge is most of what fundraises is what can actually then scale super fast. And those tend to be a SaaS solution that sells software to software developers. And that's nice, but not the most interesting thing.
Yeah. Let's talk a little bit about the red flags from both sides of the founder and the angel investor. If you're a founder, female founder, looking for investment right now, and you've chosen to go down the angel investor route, what are some of the red flags that they should look out for?
Of the red flags really depends on what are they looking for. I think predominantly, I would say fundraising is not for every type of business. So first understand what is the right business the business that you're building. What do you want it to achieve in terms of pace of growth and pace of product development and so on. And based on that, find the right investors. I think it's very like, you're asking me a question, like if I take it to it's a relationship. So what would be red flags in relationship between men and women, women and like whatever? It really depends. If you expect your investors to be with you on every step and support you, and you don't see that or you don't get that, it's very difficult. I think it's more about aligning the interest of what you're building and what the investor is able and willing to give, and vice versa. What are your expectations from that investor, and what do you want them to give you? I think the best way that I would recommend in identifying red flags is just talk to other startups they invested in. And keep in mind that this is relationship building, because the moment the investor is on the cap table, it's very difficult to get rid of them. In fact, it's a lot easier to get divorced than to get rid of somebody on the cap table. So you also need to do your own due diligence. One of them is literally just go and ask the investor, give me 2 founders you invested in that succeeded and 2 that failed. And specifically the ones that failed, ask them, how did the investor behave when shit hit the fan? Because shit always hit the fan in startups. And like, were they there? Did they understand? Were they supportive, or were they micromanagers that basically try to take control from you and so on? And again, there's a balance, because you want investors for their money and insights. But sometimes people forget that they're just the investor. So how do you balance between the two is usually see past behavior.
What comes to mind is a Netflix documentary that I watched on the e-cigarette, the Plume. I don't know if you've seen it,
No.
but basically a story where investors wanted to start seeing returns on their investment and started pushing for returns on the company, which led them to go down a different path or push them into an area that they shouldn't have been exploring. It was very dangerous for the company. It was a very interesting story.
It's super relevant. And this goes back to who are the right investors for you. So, for example, venture capital funds manage other people's money. And again, I'm talking about the standard model of GPLP, which means they need to return the money within 10 to 12 years, which means legally they need to force an exit, at least of their shares, within 10 to 12 years. Now, if you don't exit and you're just making your business, what can they do? And that's where like misalignment of interest comes into play. But again, if you are transparent, you can work it out. You can do a secondary sale just for theirs, or find somebody to buy in their shares. That being said, angels have different expectations, shorter time frame, some return, depends family offices and so on. So a lot of it is understanding that this is the journey we're going on together. Are you aligned with me that that's what we want to build?
On the flip side, what should founders be aware of in terms of the red flags that might appear as red flags for angel investors?
Again, the challenge is angel investors. You met one angel investor, you met one angel investor, because different people take different decisions based on their own personal experiences. I think one of the things that really matter is that you don't talk about doing, but actually do. Especially inexperienced founders say, "Oh no, I'll take the risk once you give me the money. I'll start building once you have cash in the bank. I want to see you're committed to this with or without me." If you're not taking the risk, investors will usually not be able to take the risk. Now, here's the thing. That doesn't mean you need to quit your job and do everything and work and go bankrupt or like go into debt. You can stop working on weekends and night, dedicate your time, build an MVP from like a service solution if you can't develop, or like Airtable automate things, but show that you understand and put time and effort into building this in a way that evidence there's a potential something, and you're not just sitting there building a deck and waiting for cash. The second part is people who don't understand the problem deep enough. If you want to come and solve a problem, you need to make sure that you actually know it. Usually it's after you've worked a bit in the industry, if it's a B2B. If you come from a need, like, and most B2C solutions come and say, oh, I believe there's a trend here. I believe there's a need in usually younger generation when we talk about B2C. You need to be able to articulate not just in your opinion or your feelings, but what is the logical argument and the indications of need or data that you see out there that you can actually articulate. Because again, I would assume that whatever you're going to build, hiring future employees, selling the product, a lot of it is in your ability to sell and build that. So the clearer, the more coherent the narrative of the business and the product and the value, the better it is.
One thing that I've heard an investor talk about before is that potentially people trying to raise too soon, even before they validated the market.
So again, keep in mind that up to 2 years ago, the amount of people that literally raised based on a deck was tremendous. And we're not in those days anymore. We're back 7 years ago where, okay, a deck is nice, but what is actually the evidence that this will work? What is the evidence that this is an actual problem and people are willing to do something for it?
I'd love to hear a little bit about some of the startups that Alma have invested in, and which ones are you excited by?
Oh, wow. So I'm excited about all startups. Let's see. I think one really interesting one is called FIBA, FIIBA. The idea behind that is basically there's a lot of waste in farming that goes, especially to in India, in banana trees. So banana trees bloom once, and then you cut the tree and burn it. And there's tens of millions of trees being burnt every year, and that's a whole impact on the climate. Sarah and Varun are a fashion designer and an entrepreneur that worked with farmers in India. They got together, realized they can process the waste of the trees and turn it into sustainable fabric. And all of the industry, the fashion industry, doesn't actually have any sustainable fabric. So they're gonna hit the ceiling in terms of the fines and everything based on regulations is gonna hit them. So they need to build something that's sustainable. So they're basically turning through a unique process like banana trees into actual fiber, and they already showed that as a proof of concept in the London Fashion Week in September. So the idea is basically transform the entire fashion industry into sustainable material that is actually sustainable from waste. There's another one called Seva, and Ritu is an amazing product person that had scaled and built in fintech remittance solutions. And she built an amazing solution where she realized the entire remittance industry is focused on transferring from external countries to the country of origin, but not what happens on the ground. And she's building a solution that will help all remittance company actually deliver direct to the customer with their own card and build a whole solution on top of that. She just raised several millions to be able to execute on that.
Fantastic, very inspiring. Shall we talk about Bramble Club? How has Bramble Club come about?
First of all, the reason we called it Bramble, and people keep asking me that, so I'm going to start with that, is because bramble is a thorny bush with a fruit. And if you've ever built a startup, you know that you can never get to the fruit without getting scarred or hurt. And what we basically offer at Bramble is sharing our scars, our experience. And the concept is practical advice from people that build shit to people that are building stuff. After we closed We From Down, I became an advisor just because a lot of people I knew asked me for my advice, and it became into a fractional role. Some of them are just advising to others. And so other of my colleagues and a group of us that work together really well at We Farm, we all cover different topics, actually started referring clients to one another because Sophie was great in marketing, growth, PR, comms, everything like that. Michelle was amazing in HR and ops, and she scaled in 5 different startups. Kenny was the founder of We Farm. And we basically realized that actually it's a lot better if we come together, build Bramble, and support founders through the journey from C to Series B. And we support on different topics based on what you need. But you can either do it like in an hourly rate or as a subscription. And I used to hate advisors as a VC, as an operator, because most of them focus on equity. And you don't want advisors on your cap table just because. And most of them don't actually have never built stuff. They give you generic advice they read on the internet. And the idea is lean approach that actually drives and focuses on bringing value and like is paid for it. $1,800 a month on a 2 months rolling contract. If you raised even a basic seed, you can afford that. And you're not exposed in any way. And we don't take any equity. So the idea is how do we balance all of that and bring value to founders? And hopefully that will work. But behind that, what we want to do is within a year or two, once we've built enough of a client base, actually start operationalize that into a product itself that helps founders support each other and productize that even further. But that's a bit longer down the line.
Fantastic. Sounds exciting. So let's move into our lightning round. It never actually ends up being a lightning round. Feel free to say however much you want to. You describe yourself as more of the execution guy rather than the idea guy. It's really important for founders to be great at execution and to be a doer and get things done as well. What one tip could you give to founders listening today to be better at execution?
It's gonna sound super basic, but like start done versus perfect in execution. There's a tendency to make sure that we want to make sure that everything will be great. And the reality, especially if you haven't done it before, is that it won't. And if you all the time you're spending on how to learn to do it best in theory, you lose in practical. So you're done if you have, like said, you can launch today, over the next 3 weeks, learn by doing, because you get feedback from users, from customers, from your own trying to do it, will basically be in a lot more stronger position in 3 weeks than spending those 3 weeks researching better and then launching. Because nothing survives hitting the market. Whatever that, and the market may be just internal processes in the company. If you want to launch, again, it all depends on what company and so on, but I am a firm believer and a big believer in learning by doing and optimizing on the fly. But you need to feel comfortable in done versus perfect.
Great. Is there a podcast or book or blog that you read that would be helpful that you could recommend to people listening?
Oh, really depends on what for. I've used to listen a lot more, but I think depends on how you're thinking about it. If it's more about venture, the Harry Stebbings, the 20 VCs, probably one of the best there. He's been doing it for almost a decade now, I think, and he owned it down to an art. He gets the right, like the top level people. There's How I Build This. There's a lot of podcasts in tech and venture that drive value from that perspective, but nothing more specifically comes to mind.
Is there anything that you listen to or read outside of the startup world just for your entertainment?
Oh, yeah, for sure. I mean, I'm a big fantasy and sci-fi geek. So I read a book every 2 weeks, and that's my escapism. But I try anything from D&D to whatever sci-fi in the future.
Great. The last and final question: how do you set yourself up for success every day?
Sounds like a great idea. If you figure it out, let me know. I think what I do try to do is basically a good cup of coffee and some yoga time in the morning. Even if it's just 10, 15 minutes, really helpful if you're able to disconnect. Again, with a kid, it's a bit more complicated. So sometimes I just wake up a lot earlier and get my half an hour of peace and quiet to come a bit more focused of the day.
Yeah, amazing. I've actually just started reading a book this morning. It's by an author that I'm going to be interviewing soon. It's titled Silence. The podcast will all be using your voice and getting out of the being silent. In the book, she mentioned some research, which was very interesting, about how silence, that quiet time, is really important for reducing blood pressure and also increasing blood flow in the brain.
So this is funny because you asked me about podcasting. I used to listen a lot more on the tube and in many other aspects. And what I realized is that I don't let my brain get bored, which actually exhausted the shit out of me. So
Yeah.
what I try to do now, like deleting most of the social media apps and all of that, is just spend some time. So I drive my son to school every day. So I use that time, just listen to music, not think about anything, have background noise, and just get bored. And the same with the tube ride, trying not to do too many things on the phone, but spend 20 minutes not doing anything, reading and rereading the signs you see in the tube. That's where some really good ideas come about.
Great. Thank you so much. It's been brilliant having you on. And I've got so many more questions, but I feel like we should end here. It's a perfect point to end. Maybe we can have you back on as well in the future.
Sure, be happy to.
If you've enjoyed listening to this podcast episode today, please do hit the subscribe button and share this episode with like-minded connections. I'd also like to take this opportunity to let you know that I'm sharing knowledge on how to build tech products. If this sounds like something that's going to be helpful to you, please subscribe to the She Founds newsletter. The link will be in the show notes.